Okay, so this is a video for Level 3 BTEC, Unit 2, Business Resources, Task P5. Task P5 is looking at a set of accounts and producing a written summary of what the profit and loss account is and what the balance sheet mean. If you do this in conjunction with pages 76 through to 78 of the textbook, the Level 3 textbook, and plus there's lots of resources online which you should have a look at to help you try and understand a lot of these key terms. But hopefully this video should be able to give you enough information to be able to do the task. First thing that we need to try and consider is some of the key terms. For people who did Year 11 BTEC last year, or even GCSE, there's some key terms which might be reasonably familiar to you. So sales, income, revenue, trading income, sales income, all mean the same thing and they're used interchangeably. Fundamentally, it's the amount of income received from selling goods or services. So the money that a business gets over the counter from its customers, all the money coming into its business, that's its sales, that's its income, that's its revenue. For an example, a business such as JD, all the clothes, all the trainers that they sell, that is their revenue. So when we add all of that up, that's the revenue for the business. For a business like McDonald's, it's the food, it's the drinks that they sell. When that's all added up, that's their trading income, it's their sales income, it's their revenue, whatever you want to call it. But all the money coming in, that's what we're talking about when we're using any of these terms, all the money that's coming into a business. For example, some businesses, though, interestingly, don't just make money by their primary source. So I've said here McDonald's, they make money from the food that they sell and the drinks that they sell. But let's use, say, for example, a hairdresser. A hairdresser will make money by doing haircuts. That will be one source of revenue. But they'll also make money, maybe, by renting out the flat above the shop. If you're a builder, you might rent out some of your really expensive tools if you know other builders don't. So you know you're not going to use them all the time. But if you've got quite a specialist tool which you know other builders might want or need or use, then you could maybe rent that out a bit, and that can bring in more revenue for your business. So there's lots of ways the business can get revenue, but all we're talking about, wherever the money comes from, it's just money coming into the business. Then, if we think about all the money coming into the business, we can then try and think about working out some profit. So the first type of profit is gross profit. So we have the sales revenue, all the money coming into the business, take away the cost of sales. So the cost of sales is how much did it cost to make that revenue. So you're all sitting now in front of a computer probably, or maybe you're watching it on a mobile device, I don't know. But whatever you're watching on, just think about the device that you are looking at. Let's just say that the company that made your computer only sold one of them and they sold it for £500. Their revenue would be £500. Now before they can start to think about the profit, they'd need to say, well, actually, how much did it cost us to make that one computer? How much was the plastic? How much were the parts within inside the computer? How much was the glass, etc.? And let's say it was £200. Then that is the cost of sales. The things that we use to make the product, that's the cost of sales. So £500 minus the £200 cost of sales, and that would give you a gross profit of £300. So let's use that gross profit figure now. So they've made a gross profit, our computer company, of £300. They then need to start thinking, well, actually, I need to take my rent and my advertising and my salaries of my staff and all the other expenses of the business. Anything else that the business has to spend money on has to come out of that £300. Now obviously rent, advertising, salary is going to be way more than £300, so that's why businesses would need to sell lots and lots of these computers in order to actually be left with a profit. But essentially, after you've got the money coming in, you take off how much did it cost to make the product, and that leaves you with your gross profit. Then you take off anything else that the business has to spend money on, they're your other expenses, and that then leaves you with your net profit. The net profit's a really, really important figure because that's the bit of profit that the business is left with. Although we've got the two different types of profit, the one that the owner, if it's just a one person, a sole trader business, the money that they get to take home from that business is potentially the net profit. Okay, some businesses might choose to reinvest that net profit and buy some new premises or do something with it, but the net profit is what you're allowed to use once you're left with it. Okay, so let's have a think now. We've got our income statement. So this is not the one that you're going to have to interpret, but this just gives you an idea of what an income statement or a profit and loss account looks like. It's done normally over a period of time, usually a year, and it shows you how much gross and net profit a business has made. So you start from the top, and if you look there, we've got the income from sales or revenue or sales income, and in this case for this business it's £50,000. Okay, so it's £50,000 for this business. The cost of sales, so how much it cost them to make that £50,000, in this case is £15,000, which then leaves them with a gross profit, so income from sales minus cost of sales of £35,000, which is pretty good. Okay, we then need to think about the expenses, the overhead, the expenditure, whatever name it's going to be put in there, but we're talking about all the other expenses that the business has got, in this case wages, utilities, rent. Once you've added all them up, in this case £30,000, you take it away from the gross profit figure and you're left with your £5,000 gross profit. Now what you need to do is maybe have a pause of this video and just work out, be comfortable that you understand how these figures were worked out. Okay, if you're in any doubt, if you're not sure how this has worked out, then give your teacher a shout. If you're quite clear about how these figures were worked out, then you've got to think about trying to interpret these figures. Okay, so you're going to say to yourself, well actually what do these figures mean? First of all, because this is a positive number, this net profit figure, because we end up with positive, that's good news. We know that the business isn't making a loss. It's called a profit and loss account because the business doesn't always have to be in profit. It could end up with a minus down here, in which case it's made a loss. So the first thing that we can notice for this business is it's made a profit. But if I was going to talk about this, I'd probably start chronologically, and I'd probably start at the top and move down. So I'd probably comment on income from sales. So the business received £50,000 income from sales. This is the money that they received from, and explain it, sort of what the income from sales means. I'd then talk about the cost of sales. What does the cost of sales mean, and how much was it? Talk about gross profit and how much they were left with, and then talk about the expenses and the overheads and what they were left with. The more detailed analysis that you can do here is to say, well actually, and the reason that we do these two calculations is, you'll say £50,000 came into the business and it cost us £15,000 to make that 50 grand, or to make the products that made us that 50 grand, which left us with that 35,000. So that's pretty good. But then here, actually the expenses, the overheads of that business, the other costs of that business added up to £30,000. So double the amount, the cost of sales. So if it was me looking at this, I'd probably comment on that and say, actually, although this business has ended up with a net profit, maybe they need to consider trying to reduce these expenses and overheads in order to make a higher net profit. If it was the other way around, and the cost of sales was £40,000, then obviously the analysis you'd be making is that the business needs to try and reduce this cost of sales. And if there's a minus number at the end, then you need to say, well, is the problem here with cost of sales, or is the problem here with the overheads? On this is the one that you're going to have to comment on. Numbers in brackets mean that it's a minus number, or it's to be taken away. So if we look, our builders, Steve's builders, he had income, revenue, sales of 650,000. It cost him 390,000 to make that 650,000, which meant that he made a gross profit of £260,000. He then has all these expenses here, which leave him, which were £195,000 in total, which left him with a net profit of £65,000. Okay, or 10%. So his net profit was actually 10%. His net profit was actually 10% of his overall sales. You might want to comment on, where is most of the money being spent? Is this figure quite high? I mean, it's tricky not being in the building trade saying whether we think that's quite high, but it does seem like quite a high figure. So maybe we could say, actually, if Steve could maybe use slightly cheaper materials without reducing the quality, would that work for Steve? Could he help try and reduce that cost of sales figure? Over here, he's got his rents, his rates, his lights, his heating, his expenses, his insurances. None of them look particularly high to me. But maybe, could he move to a cheaper place? That might be a suggestion that we make. £55,000 rent and rates. Does he really need to spend that much money? Could he rent a cheaper lock-up somewhere, a cheaper garage? Equally, the light and heating. So sort of his rent and rates, so his rent and his light and heating for his building end up at about £73,000. That probably seems quite a lot for a builder's. His wages, I don't know. Probably, 10% of the overall sales of the business, not a huge amount, but maybe that's somewhere that he could try and save some money. So your job for this task is to write maybe half a page, explain what sales is, how much he got, explain what cost of sales is, how much that was, explain what his gross profit was and how much he was left with, and then do that all the way down to net profit, and then maybe make some comments on what any suggestions, a couple of suggestions, just thinking about what I've said there, that you could maybe make to Steve so that he could increase that net profit figure. But obviously the first thing that you want to point out when you're actually talking about this is he made a profit, and that's good for any business.